The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Good afternoon, ladies and gentlemen. Welcome back again for our weekly investor series. I'm your host, Dan Theok, Senior Vice President of Investment Banking. Today we have a special briefing for you all, and we'll be looking at Mayberry Group Limited's Q1 results. Of course, we're joined by Gary Peart, the CEO, and Christopher Berry, the Executive Chairman. Welcome, Gary.
Hi.
Welcome, Chris.
Hello.
Back together again. If you're a fan of the content, then don't forget to subscribe. Also hit the bell to stay up to date with the channel because we upload content like this just about every week. Don't forget to stick around for our Q&A segment at the end of the program. Also, if you want to embark on your very first investment journey, you should take that first step with Mayberry, of course. Follow us on social media to learn more about how you can get started today. Okay, well, as promised, first up, I want to show the presentation of Mayberry Group's results for Q1. So let's jump right into it. If we can bring that up on the screen, we're looking at the unaudited results for March 31st, 2024, and comparing it in general to the same period last year. First up, we want to show that the group has robust equity at $24 billion, despite this being an 8% decrease from our equity position same time last year at $26 billion, but robust equity at $24 billion. And also, we'll get a little bit more into it. You'll see the year-to-date loss for the first quarter and explain a lot about what's going on there, the unrealized losses on our stock portfolio for the most part. And then we'll talk about comprehensive losses, which are down 27% to $550 million. Total assets, on the other hand, are up by 7% to $57 billion. So strong book value. And as a result, our net book value per share is now at $13.06 compared to $13.60 a year ago. So 4% decrease in the book value per share. Next slide shows the actual summary of results for the profit and loss statement, or all the way down to comprehensive income. First up, we'll look at the net interest expense for the period, which is a result of rising interest costs, which we haven't yet passed on to our clients. You'll see that we had Q1 results of $790 million of net interest expense. Operating expenses were up 6.8% to $630 million. And when you put that together, you have a loss before taxation of $1.42 billion. Up from a loss of $600 million a year ago. Also, there is a share of losses in a joint venture, $15 million this Q compared to $28 million loss a year ago, so some improvement there. And then net, the loss attributable to shareholders for this Q1 is $807 million compared to a loss of $497 million same period last time. That's offset by some other comprehensive income, $468 million worth of it this time around. And then at the end of the day, the total comprehensive loss attributable to shareholders is $550 million compared to $445 same time last year. And that's a loss per share of $0.67 per share, Jamaican dollars. Continuing on, next slide shows sort of movement in total assets, liabilities, etc. Again, as we mentioned before, total assets themselves up by 6.8% to $57 billion approximately. Total liabilities up to $33 billion with equity attributable to shareholders of the parent of $15.7 billion, total equity of $23.8 billion. And as we said before, a net book value per share of $13.06. And we see here in the notes that Mayberry Group reported shareholders' equity of $15.8 billion at the end of the period, a decline of 3.5% compared to the same period last year. Moving on to the financial highlights by quarter in a graphical form, we sort of look at the total assets, And total equity in a graphical form, total assets is again seeing they're at $56.9 billion, and total equity can be seen there as well too. Next slide shows the movement in the actual book value of the business over the last 3 years, and we can see the book value has increased from $11.39, peaked at $14.32, came down to $13.60, and dipped again a little bit to $13.06. So in general, we're still up by over 20% over the last 3 years, and this is coming through the pandemic. So certainly protecting, storing wealth, the preserving capital for our customers, and you can see that in the book value. And we only expect these values to jump further when interest rates start to come down. So the high interest rate regime negatively impacts the banking sector for the most part, especially on the valuation of equities that we're holding. And we've seen our net margins tighten substantially. So we're facing rate increases that we're not always passing fully through to our customer base. And we're more focused at Mayberry on storing wealth in the form of our equity portfolio, which we expect to do exceptionally well as interest rates trend back down later on through the year as we expect. So we look forward to coming back in future quarters to report on that further growth in book value. I'll be surprised if we don't surpass that 1432 record we saw in Q1 2022 within the next 3-4 quarters. Next slide shows the stock performance, and you can see sort of it being up and down, trending generally in that sort of $8 region, sometimes going a bit higher, as high as $10 in December 2023, sort of trending back down now to $8. But again, as we expect equity prices in general to be increasing, especially in Q3, Q4 of this year, as we anticipate interest rates are going to start coming down. Again, I'm going to keep saying it. I don't think interest rates at this level are sustainable. 30-day Bank of Jamaica auction rates are in the double digits, 10, 11, 12%. Again, we don't believe that's sustainable. While we see inflation, last update on inflation trending in the right direction, finally coming within range, the government's range of 4 to 6%. So hopefully if we have 2-3 more months of inflation staying within range, then the natural expectation is we expect interest rates to start coming down. And globally, we sort of see that trend as well too, both in the EU and in the US. We see interest rates kind of trending back down, a little sticky coming down, but for the most part, I feel pretty confident that interest rates are going to start to trend down later on in the year. Next slide shows the strategic initiative and how we've enhanced value, and that trend of dividends and the value we've created since listing 2005 to now shows total dividends to date of over $4.1 billion. So Mayberry is definitely a stock that pays dividends, and when you hold it over the long term, you are handsomely rewarded. And we also show in the graph to the right those dividends quantified by year, with last year there being $360 million of dividends. So good dividend paying stock, good for your portfolio for those of you who want a good dividend income yielding stock. And then the last graph shows sort of the cumulative effect of those dividends on top of your book value over the last 10 years in particular. And you can see that that's just increasing. So that's a good trend to see how the net book value per share compares to the net book value plus the cumulative dividends. So again, if you bought this stock, 10 years ago at $3, you would have seen substantial returns on your investments in the last decade. Okay, well, that's my presentation in general, and just want to have a discussion with Gary about those results for Q1 and sort of general trends. Gary, first up for me would be this high interest rate regime and how it in general impacts the business, and how are you making Mayberry sort of future-proof to push through this period. You've got great equity, $24 billion in total, but are there any concerns for you fundamentally in terms of surviving this high interest rate environment, which we've been at it for about 2-3 years now? We sort of see the tail end coming. Your thoughts, generally speaking?
Yeah, I'm not concerned. It's interesting people refer to interest rates of 10 and 12% as high interest rates. When I came into this industry, overdraft rates were as high as 120%, and government in Jamaica rates were 74%. That's what you call high interest
Yeah.
rates. Relative to where we're coming from, yes, it's higher. But I think if you look on our portfolio, the portfolio has very good value in there. And when you speak about future proofing, we've already done that in the business. So the majority of the loss for the quarter is really unrealized gains attributable to the outcome in our subsidiary MJE. And a lot of that is driven by the pullback in the price of one of the largest holdings in MJE, which is Supreme Ventures. But what we did at Mayberry, which I thought was pretty good at the time, we've always been known as a company that has significant exposure to the local stock market. And so we created MJE, which is where we put all of those assets into that portfolio and we manage it. So it's separate from our regulated entity. And then so it allowed people to get a better look on the performance of the business. Yeah. And so how we manage that business, we make sure that we have material equity in that business. And it also doesn't affect our regulated business where we finance for people who are stockbroking, etc. So that's how we're as you say, future proofed the business. So what it does is that the volatility in our portfolio is in MJE because of the movement of those shares. And it's more of a patient game, on that side. So as you know, we have some core holdings, and at any point in time, you could wake up and there's a liquidity event. And, as I said, there are some people out there who feel that, when it comes time to liquidate, will not be able to realize the prices on the market, because I've heard that's why there's a discount to certainly our stock. But again, we've proven it over and over again. Every time there's a liquidity event, it's either at or above market.
Yeah.
And then when it happens, it's too late to buy. So, the only concern I see, just touching base on where we're coming from, is that, we've gone through periods where we book massive profits as a group because of the performance of MJE. And, we don't get the full credit for it. And then when you book the unrealized losses, there's a view there, etc. But going forward, the BOJ is saying, listen, we're looking at reducing interest rates. If they do, that is going to have an immediate impact on the stock market, an immediate positive impact on the stock market. And so we're well positioned for that. Notwithstanding those macro issues, sorry, there are certain companies that we hold that regardless of where interest rates, for example, goes, they're likely to do well. So, for example, in the briefing yesterday, one of the things we saw at SVL is that they have no material revenue stream and interest income because the higher interest rate on the cash is driving interest income. Yeah. You have a stock like NCB, they finally come out with their APO. So that mystery surrounding what that price was going to be about is out of the way.
And the size of the APO.
And the size of the APO, and just a full disclosure, Mayberry is a selling agent, right? And we feel that they will achieve that objective. Once they achieve the objective, because the dilution is about 2-3%.
Yep, that's 2%.
That whole mystery surrounding an APO and what it's going to do, it's over, right? Yep. And so if you look at where the market is going to be, I expect NCB to move in only one direction going forward. We're positioned in that stock, and we expect to see that do pretty well as well. So going forward, similar to last year, I think the only other major thing from a group perspective, the other subsidiary we have, which is Wide Base, which is where we keep our private equity transactions. And at this point, the largest one is our Chalmers transaction, where, as you know, we develop real estates for, at this point, BPO buildings. We weren't able to sell on that building in keeping with budget. And, we might be having a very interesting new look on how we deal with, 30 acres of flat land in the middle of Kingston. Who's to know? Maybe we create a vehicle and bring on some more investors, yeah? So we expect that to do better as we get to the back end of the year. We're pretty confident. I think the second quarter, depending on how interest rates go, should be slightly better, or slightly, if not better, than the first quarter. Similar to what happened last year.
Right. Very good. So, and again, coming through the pandemic, 2 years post-pandemic, we've turned a $3 billion, a $5 billion profit. And so you're saying if we get out the box and see one quarter where we have a $500 million loss, which is fundamentally primarily driven by unrealized losses on the
Right.
portfolio, it's not something to
Right.
panic about. And it's a shame we don't have a cash flow to show that the business is still throwing off cash. So this really is driven primarily by unrealized losses. So folks, if you missed the SVL investor briefing yesterday, it's not too late to go and see that one on YouTube. So Gary inferred to our large stake in SVL. It's about 50% of the MGE portfolio, of which we own 50%, the MGE portfolio, and that consolidates into our financial results. And the unrealized losses in relation to SVL, a stock that opened the year at about $28 and then traded down to about $23. So we're seeing that impact in hitting our results. They had
As at March.
as at March, correct, which is the first quarter that we're reporting here. And then we had 2 quarters from SVL prior with sort of profits below $400 million. And then the March quarter, which just came out yesterday, they bounced back really strong, over $860 million, I want to say, Gary, profit for that quarter. So we fully expect the SVL stock price to start to move because I think people are seeing the fruit of the investment that's being made in SVL. And of course, the proof is in the pudding, so we want to watch that for the next 2 quarters. And I expect that profitability to only continue to improve. Indeed, over the last 6 quarters, if you take out the 2 lower than normal quarters below 400 million, they were typically in the $800 million per quarter space, touched $1 billion in 1 quarter in the last 6 quarters. So we're actually hoping to see them get back to that space. SVL is one of the, larger stocks in the MGA portfolio. I think we talked about CPJ, our bet on CPJ, which is, the biggest purveyor of goods in the hotel and tourism sector. We have a 20% stake in CPJ, and I believe that's the second largest position of MJE. And again, that stock's traded down from about $12, in the last 12 months down to about $9 currently. And so we see that impacting us as well too. So we're really excited to see those things improving. Already we see SVL trading up after those results came out, Gary. And so we're excited to continue watching the market over the next upcoming weeks and indeed months to see how the MJE portfolio performs. You mentioned NCB stock we really like. That APO is coming out. It's solving a big mystery for me. We thought the APO was going to be $20 billion. To see them only needing to raise $7 to $8 billion sends a pretty good signal. That's a stock that has traded as high as $200, but I'm not going to count the $200. I'm going to discount it. It traded firmly for 3 years at $150. And I have no doubt in my mind that within 12 to 18 months, that stock could easily be back at $120. So getting it at $65 seems quite good. And it's a stock that trades with good volume. We saw a over $1 billion trade on that stock within the last 5 weeks at $69. So, I think it'll be a good buy at $65. And we fully expect to see NCB recover over the next, 6, 12, 18 months. We'll be watching them for the next 2, 3 quarters. But I have every confidence that they're going to continue to do well. So the MGE portfolio is our medium to long-term bet on the Jamaican stock market. We're really bullish about the Jamaican Stock Exchange, about the Jamaican stock market. One of the largest investors. We have the largest sort of ETF in that space with over $25 billion of assets, which have grown over the last 7 years by more than $8 billion, huge growth. And it's our bet on the stock exchange, and we continue to do that. So, end of this week, I think you're going to see bond raise, another public bond IPO for Mayberry Jamaican Equities, which is looking to raise an additional $2.2 billion. That prospectus will be out on Friday. So when you see that, just remember we continue restructuring our balance sheet, raising financing to allow us to be able to continue investing in the stock market because we're big believers in the stock market. And when I met Chris Berry, I don't know, 10 years ago, I remember us having a conversation. I was a big bond guy, big real estate guy, but I didn't have a lot of equities 10 years ago. And we exchanged stories, and I told him stories about how I bought properties for 40,000 US that were now worth 200,000, made 5 times my profit over a 10-year space. And then I'll never forget this. Chris, you probably don't even remember. 10 years ago, he told me the price he bought carb cement at, and his 10-year history with carb cement, and I believe the return was more like 20-fold. And I was like, okay, I need to get into equities. So, Mr. Berry, again, in a minute or two, what are you still bullish on Jamaican equities, despite what you've witnessed over the last 2-3 years, the pandemic, the high interest rate regime, the market kind of slowing down? Have you given up on equities, or are you still a big fan of equities, sir?
Okay, so this is a story. Equities are all about trying to get a real return, trying to beat inflation.
Mm-hmm.
And if you look at what's happening in the world right now, I think on average, going forward, inflation is going to be higher on average going forward the next 20 years than lower. So we went through a long period of low inflation, but basically how things are set up now, inflation is likely to be higher. So you definitely want to be out of cash, and you want to be in more real assets, like companies which are growing, real estate, precious metals. You don't want your money sitting in the bank.
Mm-hmm.
That's a loser's game. So Jamaica is a special case because we've been a basket case financially for a long time. And we decided to tackle our debt problem. This has created tremendous space for the private sector to grow and expand. And since 2013, when we started on that road of fiscal responsibility, what we have seen is more growth, more consistent growth in the economy on an average basis. Not only more consistent, but higher, much higher than we've had in the 30 years prior. So what that means is that companies like Grace Kennedy, CPJ, GenAC, and SVL are going to grow faster as the economy expands. So I'm very, in 2014, I said I thought this was going to be a long-term bull market in Jamaica. I think we had an interruption in COVID and the post-COVID higher interest rates, but it will slow it down, but it's not stopping. We're on definitely gonna see equities perform going forward.
Thank you for that, Chris. Gary, Mayberry, what can we expect, what we can look forward to over the next 2-3 quarters? So the guy who's gotten a little nervous seeing that $500 million loss and is thinking, should I continue to keep Mayberry? What can you say to him to help build the confidence?
If you're a long-term investor with Mayberry, I mean, I don't think it's about building confidence. They're already confident. The true investor of Mayberry understands that you will have market fluctuations. I mean, we had this last year where the first quarter was negative. The second quarter was positive, was sufficient to offset the first quarter. We have not made a secret of what our plans are. And this is one of the reasons we're able to create value, because when the market does this, Dan, it scares off a lot of people. But when you look historically, this is actually the time to invest. And if you look on the movement of Mayberry's values, you'll realize that when we start to acquire assets is when most people are running away. And then when we start to reap the benefit of it, it's difficult for people to get in at that point in time. Yeah. So we've been doing this over 30 odd years. And, we understand that the markets has its ups, its downs. And, that's really on the equity side. on the Jamaican dollar side, fixed income business, we're pretty excited. We have been piloting a product with certain key customers, where we have them invested in the 30-day CDs at BOJ. It's as low risk as you can find. Some weeks the interest rate goes up as high as 13%. And it's a public tender. So our minimums are $1 million, but anybody can come in and bid on those CDs on a 30-day basis, and our customers have done well. Because there is an auction every 30 day, every Wednesday, I believe. And we have moved from starting with a customer like with $10 million, to we're now in excess of a couple $1 billion in terms of where we are at the pilot. And we'll be pushing that significantly harder, certainly in the quarters to come. We see value in certain types of corporate bonds. We have the launch of one of our subsidiaries coming up soon. For obvious reasons, I can't speak to the details today until it's launched. And then also, we see an opportunity. I said it at the listing of the Express Catering bond, Express Catering bond launch. We see a huge opportunity to trade local corporate issued bonds. Yeah. For some reason, the market for the trading of those bonds has not taken off in the way it should. And we're seeking as a business to put more resources there to make that market bigger. And we think that we'll be able to drive our fee income, obviously our trading income, from dealing with that. If you think about it, your fee income in terms of the brokerage, as a stockbroker, you charge a fee to move it. You also have your proprietary portfolio that you can record gain on the trading of those securities. Mm-hmm. And then as you do it, you're creating liquidity. So why is that important? The average investor has no problem investing for 2-3 years, but emergencies can happen, right? And they want to be able to access their resources in event primarily of an emergency. So if you can create a liquid market for certain bonds, people will come in and tend to buy and sell those bonds better. We think we have an ability so to do. So that's just 2 examples of some of the areas that we're going to push really, really deeply in. The 30-day BOJ CD auction, and then also to increase the liquidity on the trading of our fixed income portfolios of corporate entities.
Great, thanks for that. And remember, folks, we're going to do a Q&A segment at the end, so please feel free to start to send your questions and answers, your questions in, so we can address them at the appropriate time. I'll take 2 at this point in time. I'll make comments. So Sandra Thompson says, I don't think NCB is going to be at $150 in 2 years' time. I said $120, said it traded at $150 for 3 years strong, Sandra. But if it's not at $120 in 2 years' time, I'll take you for dinner anywhere you want to go in Jamaica. Anywhere you want to go, it'll be at $120 for sure, in my view. Philip Burgess says, what's the pipeline of public equity and bond offerings looking like for the rest of the year? So without giving any specifics, I'll say I have 20 transactions, whether bonds or IPOs, are working on, Philip, and they're all great. It's just a matter of timing, and we'll just keep releasing them, based on timing. And so I'm really excited. I think we've executed 2 so far. The Express Catering public bond IPO, in which we raised $12 million US, was an overwhelming success. We've got the MGE $2.2 billion bond that's going to come out at the end of this week. And we've got a lot more transactions to do. We're likely going to be a selling agent for the NCB APO, which I expect to sell off in 2 weeks. I think that'll be fully subscribed and do very well. And we've got lots of bond transactions, some in US, some in Jamaican dollars, lots of equity, APOs and IPOs working on. Just watching the timing, want to get the timing right, ticking some boxes, going through the regulatory approval process. But the capital market space, Philip, is really very active right now. And I think, again, over $150 billion of money sitting down on BOJ 30, 60, 90-day treasuries, because it's easy to sit down and earn 10% and do nothing on a relatively risk-free paper. But, Give it 6 months when those interest rates start to come down, and you can't beat inflation writing 30-day CDs. That's going to happen. That's not sustainable. Then you're going to see those folks looking for a new home to invest their money, a new asset class. And I'm going to bet, between equities and real estate, those will be your best two options. Real estate, you have to be careful right now. It's kind of overheating a bit, especially residential real estate. We certainly would love to see more affordable housings coming to the market. And then the market for rental on the residential side is really kind of long right now. There's, I think, excess supply if you're not careful. And so we think equities are naturally the best bet in terms of asset class for that money to get shifted to. So I'm going to bet that there's going to be a huge push at equities over the next 6 months in particular, and we're going to see prices flying. We're all going to come back and say, hey, you remember when NCB was as low as $62? I wish I had bought more. I bet you in 6 months' time, that's going to be the general sentiment. But I think in general, there's some stocks in the market. The main market average PE today is about 10 times. And there are a few stocks that are trading well below that. Good, solid companies, but just trading at very low PEs. They may have had a bad quarter. There may have been a little bit of noise. And we see the stock prices trading down. And as Gary said, when some are running and getting nervous, that's when we look to invest. And MJE, with over $25 billion in assets, only has $8-9 billion in liabilities. So we're not pushing the leverage on our businesses. We tend to be very conservative with leverage because we are in this for the long run, but it's very important to build up good reserves. $25 billion assets, about $18 billion in equity. So this is a business that is great reserves as an ETF, equity traded fund, and twice the size of Sagicor Select, Sagicor M&D. Throw in QWI if you want. Twice the size of all of those things put together. So to give you a perspective of the size of our equity portfolio. And this is something collectively the man on my left, Christopher Berry, and on my right have been doing for over 37 years. Mr. Berry, where did the time go? 37 years that you've been at this and you're still pushing hard. You still have big faith in the stock market. You need to give me one stock that you like, sir. Just one. You need to get some advice from me. One stock that you like that people can go out there and buy and hold for the next 2-3 years that's going to do well. Just one, please.
Just one?
Just one.
What type of stock?
A good growth stock.
Oh my gosh. Growth.
Just one. You can only give me one.
I like SVL.
You like SVL? Okay, I like the sound of that. I was going to guess MJE. So SVL from Mr. Berry, MJE for Dan Theok, and you get yourself any of those two and put it down for 5 years. And if your money has not doubled, call Dan Theok and say, Dan Theok, what kind of advice that did you give me? I'm telling you guys, I bought SVL at $10. Again, Mr. Berry will not remember this. He said to me when I first came here from JPS, Dan Theok, buy some SVL. And I said, sir, I would like to get some. How much can I get? He said, how much you want? I said, how much can I get? And he said, no. How much do you want? And I said,
So I don't get that big.
boy, I'm coming to you, sir. Wait your turn. And I said to him, I was a little nervous. I was getting into the market. Forgive me, honey. I said, give me $10 million worth, Mr. Berry, at $10, people. You hear what I'm saying? And when the stock went to $30, I didn't even apologize. I sold like 30% of it, made a nice $30 million gain. That happened in 3 years. And I have 5 stories like that, 5 picks that Christopher Berry, who was my investment wealth advisor before I came to work at Mayberry, 5 tips he gave me that has made me handsome, man. I'm not going to say anything further. Gary Peart, give me one. One stock that you like from the Jamaica Stock Exchange, because I know you can go all over the world on me if I'm not careful. From the Jamaica Stock Exchange, a stock that you like for these people to invest in, and growth stock preferably. But up to you.
It's the one that's right in front of everybody's eyes and they miss it. It's actually the most undervalued stock in the market.
Wow. Could it be MGL that you're talking about by chance?
MGL.
Mayberry Group Limited?
Mayberry Group Limited. So what has happened is that You know, whilst you speak about MJE, you know, Mayberry Group Limited's total assets are $56 billion.
Yes, I saw that.
But it has equity of $23 billion. So almost half of its assets are funded by equity. That's extremely low leverage. That's one.
For an investment bank.
For an investment bank.
Amazing.
The price to book is, I believe, one of the lowest, if not the lowest, on the market exchange right now. Yeah. And again, you know, when you look on the business has many different facets about it. It has a lot of value that sits there, and at any point in time, that value can just materialize. And if you look on the potential of what that value would look like, every time it materializes, it's always going to be too late to buy the stock at that point in time. So the track record is there. You know, if you like SVL, great. You get immediate cash, etc. If you like MJE, it has another set of stocks, another great stock. But the granddaddy, the big man, is Mayberry Group.
I'm inclined to agree with you. I'm not going to change my original pick, but I am inclined to agree with you. And I mean, I've seen the private equity portfolio of MGL and the pipeline of activities coming out of it, people, and I'm telling you, there's some good stuff in there. You know, Gary hinted at a Chalmers property where they have 28 acres of contiguous land in Kingston, Jamaica, that is ripe for commercial development. Boy, boss, if you don't do something with that one there, I'm going to change my name. That's just one asset. Mr. Berry also have 10 acres of beachfront property on the north coast, also waiting to be developed. Montego Bay to be exact. And the way him turned down offer, he clearly has something in mind for it. Last man offered 10 million US, and Mr. Berry said, not ready, not ready. I'm like, what you waiting on, boss? You know what I mean? A guy like me, 10 million years? Oh boy, I'm telling you. Well, so I'm excited about the future, folks. We're definitely, stay tuned for the next upcoming quarters for MGL and watch that stock price. We're going to go over this again at the end of the year. And I, Dan Theok, will be back. I ain't going nowhere. And we're going to talk about this. Okay, so over to the questions. Okay, Philip Burgess again. Why did MJE sell so many Wigton shares? Well, who am I going to get that one to now? Mr. Berry. Philip Burgess thinks you sold a lot of your Wigton shares. Why?
Okay, very simple. So, these are my words, nobody else. So don't blame anybody else for them. Just my words. My view was that Wigton needed a strategic partner that knows the business well. And we found one in the owners of JEP. They're big in Jamaica in power. They're big in Jamaica. They're big in the Caribbean in power. Very big in the dam rep in power and in renewables. Went to meet with the owner, and he agreed to come in and for us to focus on renewables. And all the major shareholders agreed to sell some of their shares to allow these new investors to come in. So 2% was my contribution to the deal. I'm very excited about the new addition to the major shareholders, and with their knowledge and expertise and with the opportunities for renewables in the Caribbean. I'm very hopeful and excited about the future of WIG.
Thank you for that, Mr. Berry. So now I get to declare my conflict. I'm a board director of Wigton by virtue of Mayberry being the largest shareholder in Wigton. And thank you for that information, sir. And I, too, am excited about Wigton. It's another, relatively large position that we have in the MJE portfolio. It's amazing when you can buy $1 billion worth of a stock and it's not your top 3 stocks. You know what I mean? It was just $1 billion worth. But it's well positioned in the MJE portfolio as a sort of long-term hold. We're big on renewables. We really believe in it. And Wigton is just positioned for growth. $3.7 billion of cash on the balance sheet. Government just had the 100 megawatt RFP reveal. and only maximum amount any one person can win is 50 megawatts. Just had the reveal. They announced the bids. I'm not going to say anything more. You will hear it. The GPE, Generation Procurement Entity, will make that announcement hopefully within the next 4 to 8 weeks. What I'm further excited about is there's another 168 megawatts that will be tendered by the end of this year. And again, Wigton ready for them. So Wigton is poised for growth. 63 megawatts in total. They could win 50 megawatts out of this RFP.
So I don't understand
and they
that.
could win another 50 come end of the year.
No, I don't understand.
Yes, sir.
They have 50 megawatts now.
Wigton has 63 megawatts now. That's their total capacity.
Right.
In the 100 megawatt RFP that was just held,
Yes.
the GPE said the maximum they'll award to any one entity is 50 megawatts.
So it's possible that if Wigton is selected, they would have a project that could increase their output by 90%.
That is correct.
Wow.
It is very, very possible. I'm not saying anything more. And further, there's another 168 carrier that they're gonna put out by the end of the year, and I can't see how them can beat Wigton. I just can't see, because it's the largest renewable IPP in the English-speaking Caribbean, one of only 2 listed companies in the space. The man them have $3.9 billion cash on their balance sheet. We don't talk about an APO for Wigton yet, if they need to raise more capital, which they don't. They can do this 50 megawatt project from the cash with a little mix of debt and do another one. So they have enough cash to do 2 projects in hand.
So again, for the simple mind like mine,
yes,
you're saying, a best case scenario, if Wigton is selected in this round, also the next set, and let's say they do 50-50, that's 100. So they'd basically move to, 163. 163. Wow. From 63.
From 63.
So that's almost, triple?
Yeah, 2.5 times. And these projects can be executed in 15 months. So they're not going to take 2 years.
Gotcha.
It could be done in 12 months if the sun, the moon, and the stars align, but they can definitely be done in 15 months. So listen out for it. And we just started because Jamaica has this overly optimistic targets. It's not achievable to try to get to 50% renewable by 2030. I apologize, ministers, PMs, whoever, you can't get to 50% by 2030. They need over 300 megawatts of new power that would...
Aren't you bidding for 168 in...
Yes, but I mean, they're going to need another 300 megawatts after that.
Yeah, but if you can bid for 160 out in a year, why couldn't you do that every year?
So it's the amount of capital that it's requiring. I don't want to rush my math, but I want to say the target that they have would require $1 billion worth of investment over the next 6 years. So
but Mayberry can find that.
Well, I did.
No, Mayberry can find $1 billion US.
I see what you mean. It's an ambitious target, mind you, but it's not impossible. But boy, it's ambitious. Either way, for Wigton, it means that business, even if they're only winning, a fraction of the 400 megawatts to come, Wigton has the capability to triple, quadruple, quintuple its capacity going forward. So it's a great growth stock for the long run, and it explains why at $1.08 it's trading at 40 times PE, because somebody knows what's coming, and at $1, a dollar's a dollar. Dollar can't even buy ice cement these days. You should definitely go and get yourself some Wigton as well too. So that's another freebie for me. All started by Philip Burgess and his fantastic question. Tavares Donaldson says MGL all the way. Tavares Donaldson says also SGL. He likes that one as well too. Robert Williams, is this a question for the forum? Let's see. Okay, Robert's asking, are exceptions made to your $1 million policy for...
I'll take that.
Please go ahead, Mr. Barrett.
So one of the things we've been doing is we embarked on a very ambitious digital project. And we're not there yet, but hopefully this will allow us to automate a lot of the things that traders like yourself like to do. So we won't have to. So at Mayberry right now, every single client has their own personal financial advisor. It's been that way for 30 odd years. It's very, very expensive. So we can't just, if we drop it too low, we get too many clients and we can't really service them. It's happened to us in the past, caused a lot of problems for the clients and for us. So, I mean, we set this million minimum. How many years ago, Gary? From before you came to Mayberry?
Yeah.
So,
But it was in US. It was US equivalent at the time. So it wasn't a million.
No,
but
I
it
think
US
it was
equivalent.
first 250,
Right,
and
it was
then we
250
raised
and then
it.
we raised to 5 and then to a million.
Yeah, so it's based on, we only have one branch and we only have so many advisors, and the advisors are very expensive because, you know, as we hire them, Scotia Thief them, NCB them, proven.
So they're trained well.
And it's take 3 years to bring one up to speed. So with our new digital platform, we're gonna reach a point. One of our goals for this is to democratize the investing process, drive down our costs, so we'll be able to have lower accounts, because ideally we focus on the clients who want to build a long-term relationship. Is not, we would love to have the clients below $1 million, but we just can't handle it. So once we develop a platform where, if you're someone who wants to be continually investing but you don't have the million, we know you will get there if you invest over time. So we're going to open up that platform for you, but it's not ready yet.
Okay, so greater things to come. We look forward to that, sir. Next one in from Philip. He says, for all, given that the U.S. Fed is now likely to cut their rates by the end of the year, why do you think the BOJ will also cut rates? And two, don't you believe the JSE prices will rebound in 2024 even without the BOJ cuts? I do. So Gary, let me give you.
So
first.
I'll
Chris
take
Bernadette,
the
Gary.
first stab at that,
Okay,
and then hand it over to Gary.
Good.
So based on what I'm seeing, there are lots of stocks that's already rebounding, and people from as third, fourth quarter last year, if you were picking the right stocks, you're up 20, 40, 50% already. That's all I have to say. Gary?
The Fed makes their decision based on what they're seeing. And the same is true of Bank of Jamaica. So remember, Bank of Jamaica started to move interest rates
Ahead of the
at
Fed.
least 6 to 9 months ahead of the Fed.
At least 6 months.
If memory serves me correct, I mean, there are a lot of private sector people that came out and criticized them heavily at the time. Yeah. And we were one of the few people that, said, hey, listen, they're moving ahead for a reason. When in hindsight, they were correct in moving as quickly as they did.
I think they had at least 3 increases ahead of
Correct.
the Fed. Yeah.
And so what has happened is that whilst, just like many other countries, we had an issue with inflation, because I think we move faster than most and we're more proactive, we are seeing some of the benefits associated with it quicker than most. So it's very likely that, based on what we're seeing with inflation, it has now moved back within the range, their target range.
Yep.
Given the level of conservatism that I think exists down at BOJ, they probably may want to see it settle there for at least 2 periods, 3 periods. I don't know what their philosophy is.
Yep.
But with certainty, they have access to data much earlier and quicker than we do. Right, so their models are much more structured and precise than our models, yeah. And so for the governor to come out and suggest that within a particular period we should potentially look at lower rates, he's seen things that we're yet to see.
Yeah.
So I don't think it's necessarily the case that you won't see a reduction until the US do theirs. You may very well see where BOJ moves before that, subject to any other change that may come down the pike. I believe once you do that, things like the equity markets will benefit materially from that. I'm not sure how it will impact the real estate market because, The banks, etc. They always look at their portfolio and concentration across different asset classes, and there are just so many projects out there. And the question is, will all the projects get funded? So I won't pine on that. Dan, you're more of a real estate expert, but I think the market would benefit positively.
Yeah, and so I think we're all aligned. So we're going to see the BOJ rates come down, whether it's in 3 months' time or 6 months' time, I can't say. But the inflation numbers are what we want to watch. We know a lot of our inflation is imported inflation, and there's so much geopolitical nonsense going on in the world right now. So there is some noise there. But we saw the March numbers come out. It was within range. And if you look at the last 3 months and you look at the graph, you can see the trend is headed down. So, the idea of having 10, 11, 12% on 30-day CD rates, I think, isn't sustainable or necessary if inflation's, within the target. What I like about that is the BOJ will be able to very quickly send a price signal. And so I look forward to seeing a 200 basis points drop on those 30-day CD rates, and the $130 billion crew riding that easy wave are going to have to work for their money. And I'd like to see them working for their money. And that means looking at other asset classes. And I think real estate, when you have big money, like $130 billion, you're looking towards commercial real estate, and the rental yields aren't the greatest right now. And so I think equities are a much easier shift. Mr. Berry talked about the fact that you already have stocks, if you chose, right, like a Palace. Those stocks are already up substantially. And we're seeing big moves happening in the market, starting to happen now. We saw a big trade on NCB. We saw a relatively large trade on Spurtree. So we can see people starting to try to get ahead of the curve. It's great to see NCB coming out with this APO so we can get that speculation and noise behind us. It's great to see them taking control of their balance sheet and making steps to prepare. And so we're going to watch that for the next 2 quarters. Real estate expert, infrastructure development, the government's commitment. You have to buy Carib Cement. Okay, I'm not happy with Cemex and their wanton way of charging franchise fees, et cetera, but if they have any sense, they're going to let that company continue to perform. So Carib Cement at $58, $60, great buy. It's been past 80 already, as high as $100 if my memory serves me well. So at $60, in an environment where the government is so strong on infrastructure development, there are like 4 different major bypass roads being contemplated, about to execute on Mobay, executing on St. Thomas, lots of infrastructure development improvement that's needed. I drove over the 3 miles flyover today, and it's got 3 different layers. We need about 10 more of those in about the country to ensure that people can move around freely, traffic can move freely, and we can continue to increase productivity in the country, because that's really needed. But the government's very focused. This is also, I'm going to call it, the next 18 months will be our silly season, where the government's going to have to spend a lot of money to shore up their position, but it's needed in terms of infrastructure improvement and development. Over $40 billion will be spent on improving road infrastructure. So it's, to me, there's some glaring stocks. Tourism is just growing from strength to strength, and if you don't have ECL or CPJ, then you're not serious about investing in tourism-related stocks. And so I think, Philip, end of this year, I would be surprised if stock prices aren't up by 20 to 30% end of this year from where they are today, or certainly over the next 12 months. Certainly over the next 12 months. If I'm investing big bucks for any client today, my hurdle rate is 20% for the next 12 months. That's sort of my internal hurdle rate. And if I don't achieve that, I would be disappointed that I didn't do for my client what Mr. Berry has done for me every year for 7 years running. So, I think we're at Mayberry. What you're hearing from this is we're really bullish about Jamaica and the Jamaica stock market. I hope to see in the second half of this year at least 4 IPOs. And next year, I think it's going to be a boom year. We'll have about 10 IPOs in the entire market. I'm not saying Mayberry alone. And there's some big ones to come that we've been, sort of listening to hear. I think there'll be 2 next year that'll be like $10 billion APOs. Won't call the names right now, but I will in 3-4 months' time when we see how those guys are positioning themselves. There are going to be some big IPOs next year. This, $7 billion APO by NCB. I mean, we spoke to the management team and said, hey guys, $7 billion is a joke. That's going to sell off in 2 weeks. I mean, we thought you were coming with $20 billion that you're really going to go big. And they were like, hey, we don't have to do it. 7 billion, 8 billion will be fine. So we're excited about the market. I hope you guys will get excited as well too. Do not call me in 6 months' time and say, boy, Dan, I remember when you told me about NCB or SVL or MJ or MGL and I didn't buy. You know what I mean? Don't call me. I don't want to hear the stories. I had this conversation with a good friend when Carib Cement was $12, and people were like, I'm not too sure about it, and now it's at 56, and this is the low. At $80 is when I first exited some of my Carib Cement, probably sold 25% of my Carib Cement at $80, and I've been buying back again when it went as low as $52, and I'm not going to sell again before $100 next time, quite frankly. So we're excited about the market. Again, I hope you are excited too. And with that, unless Mr. Barry or Mr. Parrott has any closing remarks, I'm inclined
more
to
questions, or?
start. No more questions so far. Just Donald Tavares says, Tavares Donaldson, says he's bullish on energy, and so are we. That's why we're the largest shareholder in Wigton. And that stock, I'm telling you, I'm conflicted. I'm a director, whatever. But in 1 year,
Don't
year's time,
Don't speak about it.
let's
If you're
talk.
conflicted, let's move
No,
on.
I'm not conflicted. I'm just saying in 1 year's time, you're going to see the hard work. You guys saw the appointment of Gary Barrow as the CEO for Wigton. Just keep watching, guys. There's a lot that's going to be happening in that space. You're going to see this thing really blow up. So thank you, Tavares Donaldson, Sandra, Philip, and the rest of the online crew for your faithful comments. We really do hope you guys enjoy the program and get value from this. Look
Tell
out.
them about some of the more shows that's coming up.
Yeah, it's going to be exciting over the next 4 weeks. We're going to have at least 3 shows for folks releasing results. So look forward to that. Dollar Financial Services for sure. I think if Gary allows me, we'll probably do a program with NCB next week. Maybe look at their APO. We got a lot of clients coming out with results, and we want to get them on the program. We'll have more CEOs on the program. At least 10 CEOs will be on the program in the upcoming year. We've got good reach, great relationships with folks we really like. We've been in business, as Mr. Berry said, for 37 years, and we've got long-term investments that we've made.
No, Dan, this year's our 39th year.
This is your 39th year. I'm not great at counting like that. Is it your 39th year?
1985.
Wow. Yeah, that is 39. Yeah, I can do that math pretty quickly. Impressive. 39 years and counting. And what I like about, working here is when I look at the relationships they've built and we see the generational wealth that's being created. And it's great to see the transition and the changing of the guards, like from Robert Levy to Chris Levy, and the great relationship we have with the Levys and Jamaica Broilers Group, another stock that we're bullish on, and we love the work that they're doing. And it's great to see, sort of the changing of the guards and how those businesses have grown. I think about CPG and the relationships we have with Mark Hart and Tom Tyler, great guys. We love what they've done in that tourism space and how they've made that stock available to the public to allow others to partake in it when they didn't really have to do it. Great guys, great company, just going to continue to grow from strength to strength. We love the relationship we have with the Mutes and Supreme Ventures Limited, and giving us the opportunity to help them transform that business. We're in Ghana, we're in Guyana, we're kicking butt in Jamaica. We've got great relationships with folks like PB Scott at Mussons and the work we do with them and our Chalmers development and in so many other projects. Big up PB, and that's why we're invested in Genac and so many other companies that PB is involved in. So at Mayberry, we're big on relationships. We're big on changing lives with the way we invest. And Mr. Berry gives me access to his entire CEO clientele, and I've made a great bunch of friends. Big up to Jamaica YPO, the relationships we've built there. And so we're really excited about Jamaica, guys. We do this for a living. We invest. We help companies transform, come to the market, raise capital, and do well for the benefit of all of the shareholders. That's what they've done for 39 years, and that's what I've been doing for my last 6 years here. It's already 6 years, amazing, and I look forward to the next 6. I'll probably be retiring in the next 6. I'm going to try to retire early, spend some time at home with the wife for a change. But I'm really excited about the work we do here, and I wouldn't be here, Mr. Berry, if I honestly didn't love what I was doing and love to see the transformational work that we're doing, the relationships we've built, and I don't want people quarreling with me that we didn't call their names, because there's a great bunch of guys out there that we've worked with over the years. I apologize if I just picked the 3 or 4 that just came to the top of my head. They're like 20, 30 different companies that we work closely with. We help them raise capital. We help them solve difficult solutions. Throughout the COVID period, we had dozens of clients whom we help them to refinance their balance sheet, to restructure their debt, to raise capital where it was required. And, it's just something, we enjoy doing. Look at the $12 million raise we did for Express Catering Limited. Shout out to Ian and Mike. Didn't call your names before. And what we've done with that business, Gary, and we'll continue to do because we love what they do at Express Catering Limited. So there's so many great relationships we've built. And I thank you guys all for having faith in us here at Mayberry. We will not disappoint. With that, I think we can wrap up. And so that's it for today's discussions, folks. I'd like to thank our viewers, as usual, for tuning in and for your great support, which is greatly appreciated. Big thanks to my fellow panelists, Mr. Christopher Big Berry and Mr. Gary Teddy Bear Peart. I just made that stuff up on the go. If you're curious about the updates on Virtual Investor Forum, then find us on social media. We share live stream updates like this about our upcoming guests on our social media pages. So give us a follow to learn about all things forum related. We have a few exciting guests in the pipeline, so I can't wait to share the next episode with you guys. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive notifications. Ding, 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 ding. And remember, wise investors, slow and steady wins the race. Goodbye.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.